excellent work. Okay, the recording has started. He is constantly looking to improve his communication skills and help other Toastmasters also. Please help me welcome Toastmaster Hisham Jifri. He is going to be speaking on the 7 pillars of financial prosperity. Mr. Hisham Jifri, 7 pillars of financial prosperity. Please take it over, Mr. Hisham.
Thank you very much for that very kind and very generous introduction, DTM Ratidarnath. It's such a pleasure to be back at Bahrain Advanced Toastmasters and also to be able to present this small workshop on the 7 pillars of financial wellness. Now, I'm sure that all of you, or most of you, will be familiar with table topics. So I want to start off with a small table topic. And if you agree with this, I want you to unmute and say yes. And if you disagree with it, yes, I want you to unmute and say no.
Yes.
Yes.
Money is the root of all evil.
Yes.
Do you agree?
No.
Yes.
I don't agree.
No.
I don't
Yes,
agree. I don't
100%
agree. Lack of money is root cause, not the money root cause.
Exactly. I love that. Thank you very much. Right. So the original quote goes as lack of money is the root of all evil. And this has been attributed, among others, to Mark Twain, and some writers attribute this to George Bernard Shaw.
Sure.
And isn't this true? We say that money can't buy happiness. But then why are we in the Middle East? So one of the series of steps that you take on the road to get to happiness, just like friends, just like family, just like TV, just like books, just like good food, money is one of those things that if you have it, you sleep a little bit better, and very importantly, you are able to do some good to the people around you. I want to share with you a small story. And as we listen to this story, I want you to see whether it is familiar. A young boy qualifies out of his school, and at 18 years old, he starts studying for his first professional exam. He is in one country and the exam is conducted from another country. So the exam fees and the membership fees has to be paid with a small piece of plastic, which is called a credit card. Now, initially, when the 18-year-old boy approaches a bank and then gets a credit card, the thought process is, I will not pay for anything other than the exam fees. I will not pay for anything other than my membership subscription. But then you go out, you meet friends, you watch movies, you want to go to a cafe, and then automatically the piece of plastic comes up. The first month's bill is paid exactly on time. The second month's bill is paid exactly on time. The third month's bill is paid exactly on time. Fourth month, half is paid. By the fifth month, a quarter is paid. By the sixth month, we don't even want to open the envelope and look at the credit card bill. If this is a familiar story, then the roots of financial prosperity tend to get buried in the mountain of debt. And if the moderator would mute the person who is attempting to contribute, I'd appreciate it. Thank you so much.
Yes.
So one of the things that blocks you from financial prosperity is this mountain of debt. But why is it that we get there? Why is it that this is a familiar story to many of us? This is something that I want to uncover together with you over the course of the next 20 minutes. The first pillar that sets up your financial prosperity is this: save at least 10% of all you earn for investment in the future. Now, I'm sure that you have heard that common sense is rather uncommon. And this is probably the most common sense of anything that we could think about. We live in a time, in an era, in an age of instant gratification. I see it, I want to have it. I see it, I want to buy it. I see it, I want to possess it. But the ability to build the discipline to put something away for a rainy day that will come in future is something that has to be built upon. Now, this is a principle that is built, and if you want my personal advice, it is double the 10% to 20%. As soon as your salary comes to you, set aside 10%, save it, forget it, until there is a requirement for it. Do not touch that 10%. And that has to be the first thing that goes out of your monthly paycheck. Why do I say this? Because think about it. You pay the rent, you pay the electricity, you pay the people who deliver your food, you pay for groceries. But the most important person who provides for you is you. So don't you deserve to be paid a salary? The first step in prudent financial management is to make sure that one part of what you earn is yours to keep. So make sure that it is separated, set apart, and kept aside. Pay yourself first. You pay the rent, you pay the electricity, you pay for water, you pay for groceries, you pay for food, you pay for internet. Why not pay yourself as well? So set aside 10% of everything that you earn. But as right has left, red has blue, right has wrong, the second pillar is if you save 10%, that means now you've got just 90% remaining. We've got to adapt and learn to live on 90% or less of your income. Now, I want to involve you in something, and I want you to tell me what you observe in this picture that I'm about to share with you. What do you see?
He is trying to be defensive, the other person.
That's a good one. Yes, he's trying to be defensive.
I see a
This-
smaller man beating up a bigger man.
Great observation. A great
Back is
observation.
against the wall.
His back is against the wall. So this is a situation where there is a conflict where two people are battling in order to come out on top. There is one person clearly on the defensive and there is one person clearly on the offensive. And this is the battle that we face with regard to prudent financial management all day, every day. How much to spend, how much to save? Should I keep it in my pocket or should I put it into someone else's pocket? Now, when I tell you that you've got to make up your mind to live on 90% of your income, that takes preparation. In order to attack the problem, the first thing is you've got to have your eye on the prize. Visualize what it would be like to finish 40 or 50 years of service, retire to a comfortable home you've paid off, with money in the bank, and the ability to smile and buy your grandchildren anything that you want. You've got to have your eye on the prize and then attack the problem head on. Be determined, be focused, keep aside the 10% or 20% and learn to adapt to the remaining 90 or 80%. But remember, life is nothing if not full of problems. So there will be some emergency, there will be breakdowns, there will be issues, there will be problems. So you need to have a defensive mindset as well. At the same time that you save, you must have a mentality that out of the 80% that remains or the 90% that remains, it's not that you spend and you just waste everything. Have a mentality that some part of it would be required on a monthly basis for expenses. Greatness is celebrated out in the open, but greatness is built in the dark through rehearsal, practice, and in gymnasiums. And the next 3 points. The muscles that have been built in this attacking structure didn't happen in the fight, but it happened through discipline every single day until he lands that knockout punch. So is it easy to do? No, it's not easy to do. If there's money in your pocket, you're very tempted to spend. But remember, it's crucial that step by step, day by day, you think on how you can live at 90% or at 80% of your income. Because decision plus action equals results. But what are these decisions and what are these actions? Some of the things that you can think of are to ponder, prioritize, and then prosper with regard to what you want to do. But how? I am very, very fond of this beverage. I am very, very fond of this beverage. But instead of going out and paying 2, 3, or 4 BD, now what I do is I try to make it myself because it is a fraction of the cost. The second thing is eating out. Should you eat out? Yes, by all means, if possible. But make it a celebration, make it a one-off event. It should not be all day, every day, 3 times a day. If you go to a mall and if you are tempted to shop, then the answer is limit your visits to the mall. If you go to a supermarket and you feel tempted to buy sugar and you feel tempted to buy things, make sure that you go on a full stomach. So little things make a big difference. Decision plus action equals prosperous results. Remember, luck is where hard work meets opportunity. And this is a quote from Seneca the Elder. The third pillar of financial prosperity is to take advantage of the power of compound return. What does this mean? In summary, it means start now, start early, and then keep at it. Save the 10%, start saving it now, and don't let go until you decide to retire. Now, again, I want to illustrate this principle to you with a small story. And I want to ask you this question. If you have an A4 paper, how many times do you need to fold it in half before you have folded it enough times for it to go all the way up to the moon? Any guesses?
Oh, maybe thousands of times, infinite. It's a geometric series.
Thank you for that
actually.
attempt. The answer is
Geometric series of 42 times.
42 times. And I've included a couple of formulas. Now don't fall asleep on me. I've included this for completeness sake, just to show you that the power of compounding gets this 0.1 millimeter paper up to 439 billion millimeters, 440 billion millimeters, which will reach the moon. And if you fold it a couple of more times, you can come back to Earth as well. This is the power of compounding. So 10% invested or 10% of your income invested at the age of 18, at the age of 20, compounding over a period of time until you are 60 will take you not only to the moon, but to the heavenly realm of comfortable retirement. It's not too late. If you start early and you start young, a small amount will grow. If you want to start now, then maybe if you have something in mind, put it in, but then forget about it until it reaches that bulk. And that's the power of compounding. This is not Hisham Jeffrey speaking. This is the Oracle of Omaha, Warren Buffett speaking. And he says, if you want the best investment, the power of compounding. And this is a real secret that many times we tend to ignore. Start early, stay consistent. Do not let your discipline waver. Weekly, monthly, annually, quarterly, whichever it is, set something aside, let it earn the interest or the income that it is supposed to earn, and keep it up. Present is better than perfect. Consistent is better than spectacular. The fourth pillar is your hard-earned money should go in to making your retirement comfortable. So invest in what you can understand, and very importantly, with people you can trust. Because in the day and age that we are today, the amount of investment options that we have are almost infinite. But the chances that we have to lose that money is just once. So prudent financial investment starts with a trustable relationship in something that I can understand. Because if I go to a doctor and he gives me a medicine, I will always ask him, what is this supposed to do? If I go to a restaurant and they recommend a particular dish, I will ask them what's included there. If I go to a movie, before I've gone to the movie, I watch the trailer. So if I do all of this with doctors, with restaurants, with movies, shouldn't I do that with my hard-earned money as well? So make sure that the money going in goes into something that you are familiar, that you're comfortable, or that you can understand as well. The Oracle of Omaha, Warren Buffett, for many, many years in the top 5 richest people in the world says, if you want to invest in a business, invest in something so simple that it can be run by a fool, because someday it will be run by a fool. Warren Buffett has invested in Coca-Cola, the Washington Post, Wrigley's Chewing Gum, Dairy Queen, all of them businesses that can be easily understood and that have a purchasing power that is necessary for the economy to run. And he says, I don't look for 7-foot bars that I have to jump. I look for 1-foot bars that I can easily step over. The 5th pillar is a tricky one. And it says, buy the house that you live in so that you don't squander the money on rent. And the second time that this was emphasized to me was at my home club when an engineer made this presentation, a wonderful research presentation saying, if you are paying 200 or 150 or 300 or 350 per month as rent, why not channel that investment into something more tangible that you own at the end? And many, many times the first asset or the first real asset that we own that will last a lifetime tends to be a mobile phone or a car, and the third one tends to be the home. So if you are at a point in your life where you're looking for something to invest in, consider owning the roof that is above your head. The 6th pillar of financial prosperity is to have a realistic insurance program. And this means once you have saved, once you have paid the premiums for a period of time, the evening of your life or the retirement, you should not have to think. You should not have to stress. Because if the decision is made right now, and if the diligence is done and you have picked the right sort of insurance, then that relationship will start to pay dividends when you really require it to. The final and my favorite pillar for financial prosperity is invest in the most important asset of all, and that is your personal development. You get paid, you get recognized, you get promoted, you get transferred, you get recognized for what you can do. But to do something different, to solve something in a creative manner, you've got to build in the mental resources so that you can execute those skills. So in this time period, consider investing in a bachelor's degree, a master's degree, an online course. Toastmasters International renewals are coming up. So make sure that you invest in yourself, because people will pay if you can make the pain go away. There's a reason why doctors spend decades honing their skills, because that is a skill that will never go out of fashion. So think about what you have. Think about how you can improve it. Think about how you can take it to world-class levels. It doesn't happen now. It doesn't happen tomorrow. It happens over a period of time. Keep finding new ways to add supplementary income. And in this particular time period, in this electronic time period where we are going completely virtual, you have enough and more opportunities to explore it. Strive to be the best version of you, because everybody else is taken. But if you can be the best version of you, there's nobody else who can be better than you. No one hires you for what you know. They hire you for what you can do, the problems that you can solve. But the solution comes through studying, through improvement, through development, and there is no better time to start it than right now. In this COVID-19 time period, everything is virtual. You can go to meetings, conferences, take courses, study. All of this can be done in the comfort of your living room through the very convenience of your computer screen. Now, where did I get all of this information from? And it is from my favorite source, a book. And this book was written in 1926 by a gentleman by the name of George Clason. It is a book that I try to reread at least once a year because the wisdom that is included here is absolutely fabulous. It's one of the smallest books that you will read, but the wisdom ingrained there. And it is written in such a beautiful manner with such common sense examples that it makes real sense. How did I apply this? For me personally, once I read this book, I have tried to actively, over the last so many years, pay off all my credit card debt. And I hope to be debt free by March of 2022. That is one thing that I really wanted to do. And I forced myself to try and pay off all the loans that I'm trying to have. Increased my savings by decreasing impulse buying. And one of the ways I try to do that is instead of buying coffee, now I take my coffee with me to office. I don't want to go and put myself into the way of temptation. I try to avoid going to malls. I take my coffee in a vacuum flask. I try to invest in personal development such as Toastmasters, online courses, coaching and training so that I will be able to do something different, so that I will be recognized. And I try to read a book with my morning coffee and for at least 20 minutes before I go to bed. Because 20 minutes every, let's say for 20 days, that's 400 minutes that nobody else is doing. I love books, but now I try to buy books secondhand. And that is the very reason that I use Instagram. I try to invest in online courses when they are massively discounted. They come at discounts at 70%, 80%, 90%. And that is when I try to buy these courses. And I have completely stopped watching television except for 1 hour on Friday. And that is the time that I use for online courses or for reading. Finally, I am fighting and failing, but I am trying really, very hard to avoid going to malls and sales. I'm trying very hard. And this is one of those disciplinary punches that I have to take. Warren Buffett has 2 rules. And he says, rule number 1 is never, ever lose money. Rule number 2 is never forget rule number 1. If you have it, you have it. If you lose it, then it's gone for all eternity. One of my favorite quotes comes from C.S. Lewis. You can't go back and change the beginning, but you're here right now. You can start right now and change the ending or the destination where you are heading to. Save 10% of your income. Learn to live on the 90%. Very importantly, invest in yourself because you can make a difference, and that difference will make your retirement a truly heavenly experience. Thank you for listening to me. Good luck. God bless you. Thank you very much. Back to you, Mr. Toastmaster of the day.
Thank you, DTM Isham Jeffrey, for a lovely presentation and a very simple but lot of message in there, which we can all take home and start working on it, as you said, immediately. Fellow Toastmasters, our VP Education has said already on the chat that all the questions will be taken up at the end of the meeting. So we will comply with his request and we will go to the next speaker immediately now. Our next speaker is Toastmaster Vivek Gupta. Vivek Gupta is from Rajasthan, India. He is a chartered accountant. Vivek Gupta is here in Bahrain from last 4 years and his family is in India. Works at Khaliji Commercial Bank, member of Allied Bahrain Toastmasters Club. He likes, you won't believe this, he likes dancing and taking part in athletics. Today, he is going to be speaking on finance forward. As a chartered accountant, he's got a lot of things which he can give tips to us, and let us listen to him. Mr. Vivek Gupta, Toastmaster Vivek Gupta, speaking on finance forward. Finance forward, Toastmaster Vivek Gupta. Take it away, Toastmaster Vivek.
Thank you, distinguished Toastmaster Ratindranath, for such a delightful introduction. Before I start, can I confirm if is my voice audible?
Yes,
Is my
sir, you
voice
are completely audible and clear.
Thank you. I'll start sharing my screen. Please confirm if you can see my screen as well. Is it visible?
Yes, sir, visible.
Okay. I hope you cannot see my notes.
We would love to, but we can't.
Great, great. That's great. Then in that case, and before now, my timer, you can pin the time. To start with, I'll thank our previous speaker, Hisham Jifri, for such an engaging speech. Actually, I forgot for a moment, I forgot that I am the next speaker. So I was involved into the speech itself. Now, moving forward, let me thank the DTM Ratindra again for such a delightful introduction. Ladies and gentlemen, fellow Toastmasters and President, I welcome you and thank you for attending this session where we are going to dwell into the future of finance soon. But before that, there are a few things I would like to share and discuss with you all. This session, which we all are attending today, is part of special webinar series with the theme of Old is Gold, isn't it? Can someone from the audience confirm this and correct me if I'm wrong? If
Yes,
not
sir.
wrong, then why the theme is this?
Because you are a very old man.
Yes, part of the reason you got right. And yes, like we all are doing during this session, no one is required to be on mute or keep their video turned on or need to avoid using the chat box. Feel free to do so, whatever you would like to do. And if you have any questions, raise your hand in between and we'll discuss the same first. Be comfortable and let's be interactive. Now, coming back to our question, why the theme of the webinar is old or gold, and also why the theme of the meeting is secrets to finance and investment, and how they are related to each other. Anyone, Toastmaster Faraz, why they are related to each other?
I would love to find out, and that's one reason why I'm here, I guess.
Sure. In that case, let me take this up. To start with, I quote Ralph Waldo Emerson: "The desire for gold is not for the gold." Please note, the desire for the gold is not for the gold, it is for the means of freedom and benefit. Isn't it right? Money or gold in itself is not the ultimate goal of wealth. The freedom it affords for those who obtains it is the ultimate goal. And as they say, money is a terrible master, but an excellent servant. And to make sure it keeps serving us excellently, maybe that's why we are here, to learn the secrets of finance and investment. And of all our audience here, some of us have already learned the tricks of finance. Some are planning to learn, like me. And some of us must be thinking, what if I would have learned these skills in the past itself? Now, all said and done, can you go back and change the past? I'm pretty sure not. And if anyone can, please do me a favor. Make sure to pass by November 17, 2019 and let the global authorities know about the COVID-19 outbreak, please. Good evening, everyone. Now, since we cannot go back and look, let's look into the future and gear up to learn where the future lies ahead. I, Vivek Gupta, introduce myself as our speaker for this session, and I'll speak to ensure that we get slightly better understanding of future of finances with our topic, finance forward. Every individual is not same. So is the thinking of an individual. When I say finance here, number of terms must be running through one's mind. Some must be starting thinking about the theories of finance. Some must be thinking about the other things. So when we say finance, some people must be thinking about behavioral finance. Other must be thinking about experimental finance, financial mathematics. All these are financial theories. Some may be thinking about personal finance, corporate finance, or public finance. These all are branches of finance. And some of the big angel investors, like people like DTM Faraz Farooq, they may be thinking about finance in terms of investment management, asset management, wealth management, insurance and investments, and similar. And others like me may be thinking about the routine terms and the related to finance, financial planning, risk management, and financial advisory, and so on. The list is infinite. and so is the boundaries to the imagination. And this is not new. Back in 2016, when I was planning to join a bank in India with a willingness to work in finance, one of my friends' casual question just left me thinking, what finance is? He asked me, what exactly, Vivek, do you want to do in finance? I was not sure. So this is very common. So therefore, to set the tone of this session, we will narrow down our range. Today, we'll talk about three things in finance, which are finance today, where we will discuss about the origination of finance briefly and the current things going on in finance. Then we'll move on to the second topic. Second topic is finance forward, where we shall discuss about the upcoming changes in finance, related developments, the approach we require to take to adapt to the changing circumstances and market conditions. And finally, bridge finance. Bridge finance, what is it? We'll discuss. Our approach to bridge, it is our approach to bridge the gap between the first and second point, which we just discussed. Our mind glorifies past. When we look back and we tend to think that history has always been amazing and more sophisticated. However, in terms of finance, the story is a bit different. It was really simple. The integrated form of finance and accounting, which we look today, didn't exactly exist in the past. The boundaries were defined. The earliest historical evidence of finance is dated back to around 3000 BC. Finance as a term was originally used to define the just the process of channeling money from savers and investors to entities that need it, which is today, in today's term, it's called banking. Whereas the early development of accounting dates to ancient period and is closely related to developments in writing, accounting, and money, which later took the form of double entry system in the bookkeeping. And finance, as we know it, evolved around the matters regarding the management, creation, and study of money and investments. The form and meaning for finance has changed as the area of coverage enlarged. In terms of professional, finance or accounting are not separate branches of a tree. Rather, it's an integrated network where finance and accounting are dependent and linked to each other. If you allow me, let me share a personal example. I'm an Indian chartered accountant and a CFA by USA by qualifications, but I'm a banker by profession. Indian chartered accountancy revolves around the concepts of accounting, financial management, cost accounting, auditing, whereas CFA orientation is towards wealth management, investment management, investment banking, but the underlying essence of the both is same. With the knowledge, without the knowledge of financial statements and accounts, no one in financial institution can anticipate to be a financial manager or an investment banker. With recent developments in the field of taxation in the entire GCC region, without having understanding of the finance structure, how can one be a tax expert? The whole purpose of this discussion is to understand the role of finance has evolved since its origination and changing continuously with more and more integration with each other. If you see this graph, which I'm sharing with you from quite some time, accounting and finance both are related. It's basically integrated. Financial statements are prepared, which is used later in the finance in a broader terms. Record keeping is done so that we can see how the financials have moved. Money lending is done, then the record is being kept. Everything is being linked to each other. So you can't segregate it properly. The structure has evolved. The question is how we will be able to evolve with the structure. And the first step is to evolve. If we can mute ourselves. May I request? Thank you. Now moving forward and coming to finance forward. Banks are the largest financial intermediaries who facilitate the core function of money supply in and out of the economy, be it global, regional. Most of us in this meeting knows about banking very well, don't we? Toastmaster Ratinder, can we confirm? Do you know about banking? Okay, let me take this forward then. Yet, since we know about banking, even personally me, I've been working in a bank, yet it took years to understand what Bill Gates said in 1994. His words in 1994 were, banking is not necessary, but banks are not. And it is becoming true. This statement was hard to understand in 1994 when technology-based financial service platforms were not so popular. Let's leave banking aside for a minute. How many of us here have been in touch with finance aspects in our respective organization where we are working today? Please let me know. And how many of you have been listening to just overheard the conversation of digitization in their respective industry, be it FMCG sector, hotels, manufacturing, banking, or such kind of sector? If you can just let me know, please unmute and let me know if you have ever heard the terms digitization and such kind of terms.
Yes, electronic invoicing, e-invoicing terms and all these are coming up.
Yes, in addition to that, robotic process automation, RPAs, such kind of things.
And that is another thing is called data mining is there, and
Correct.
there's something
Correct.
like that.
Correct. So we need to understand finance functions face constant pressure to evolve in response to the ever-changing business environment, especially like a COVID-19 one. Although this evolution has no endpoint, one needs to understand what a successful value-adding finance function will look like in 10 years. If you can see my screen, based on a study by BCG in the aspects of future finance, it is noted that the finance function is uniquely positioned to steer enterprise level performance. As a custodian of performance, to fulfill this role, the finance function should change, and how it operates in four main ways. First one, hybrid finance function. With first being finance as hybrid function, it is clear that digitization is fundamentally disrupting finance. In their initial applications of digitization, companies seek to reduce manual work by standardizing, optimizing, and almost fully automating their main finance processes from end to end. At the same time, they improve the availability and accessibility of data to each and every person in the organization. Most companies have already embarked upon this stage to the journey. After mastering the first stage, finance organizations should move toward hybrid finance, which is a symbiosis of finance specialists and the digital ecosystem that includes terms like artificial intelligence, machine learning, and similar, as we just discussed. By integrating finance employees and digital capabilities, the finance function can use the digital ecosystem not only to promote efficiency, but also to perform value-adding tasks. Examples of hybrid finance delivers include providing initial hypotheses on appropriate actions to be taken, performing independent tasks such as hedging, and creating scenarios for complex situations relating to interpersonal relationship among caches, taxes, and balance sheets. Second, this is all based on BCG study of the respective organizations. Second is organization as a living system, where finance will operate itself as a living system. The end-to-end optimization and digitization of process give rise to a networked organization that forms a living system. In this organization, the remaining manual tasks will be automated and be transferred to the global business services as well as to the shared resources, such as project managers, business process owners, automation experts. Then comes the responsibilities which are beyond the core topics. And then in this, the network organization makes it possible for the finance function to extend the responsibilities into the adjacent topics previously managed by the other support functions, especially building a bridge between the regulator and the government authorities to actively optimize regulations and tariffs, like taxes, serving as an incubator of finance applications and supporting new business model with financial expertise. Fourth and the most important one, advanced capabilities. Finally, reaching to a stage of advanced capabilities where careers and ways of collaboration shall evolve and become more diverse to support the finance function's role. Finance employees will increasingly serve as a connection between technical analysis. Please mark my words. Finance employees serve as a connection between technical analysis and developers and result-oriented business people. facilitating their interactions and translating their terminology. And it's not necessarily to follow the order, as the fourth stage of advanced capability is already here. The fourth stages which we discussed, which I just said, is not going to be in a specific order because advanced capability is already here. Not based on any research or statistical analysis, I'm sharing this with you. I'm not pushing force on this because I'm sharing this based on personal experience. As a professional, I'm doing this in the last 4 years. I've been working as a finance specialist while parallelly serving as a bridge for the developers of the digital ecosystem. And with this statement, it takes us to the final area of focus, bridge finance. What is bridge finance? If anyone is aware about bridge finance term here?
I think connecting between what are the old ways and the new ways, bridging the gap between them. That is bridge finance.
Yes, exactly. In our context, this is the bridge finance. However, for those who are not aware, let me just give you a glimpse also. Here, we are not talking about the traditional meaning of bridge finance because basically bridge finance means the gap between the time where a company's money is set to run out and when it can expect to receive infusion of funds, basically a cash crunch cycle for the organization. Here, as we just discussed, we are discussing the gap between the time when an individual's traditional finance expertise is set to run out and when she or he can expect to receive infusion of new skills with which every finance position can be springboard to a more dynamic career. To cover the distance from one's point, how should I say it? We are standing in midpoint, and the distance which you need to cover to reach to that direction, to reach to that destination, and to bridge the gap. We have two ways, and for two type of people basically. First is for the existing torch bearers in the financial industry who already are at par and who have done so much in their respective industries. But despite of their extensive knowledge, they may consider going back to their roots and consider options like becoming a true business partner. In order to be a true business partner to the CEO of your organization, you must first excel at forming and maintaining business partnership across organization and between key functional areas like IT, strategic relations, and all the digital processes. Second is linked to the first only, become a digital leader transformation. Become a leader in the digital transformation, because as a financial torchbearer in the industry, one sits at the intersection of the strategy, technology, and financial management. However, the technology that drives innovation and digitization is increasingly linked to the business performance, with business units hyper focused on outperforming the competitor and ensuring their business model remains innovative. The pressure is on the financial experts to support the business innovation and transformation efforts. Third is the become talent management guru. Most of us have foreseen this already, but leading finance experts are required to build a digital forward solution where in the finance, in order to attract highly skilled people, they need to do this. The fact is, professionals today want to work for an organization that only not talk the talk about digitization or digital innovation, but also walk the walk. Now, second path is for the next gen leaders, for people who are still in their early stage careers. This is really important because with the advent of COVID, most of you must have seen, as we just spoke about the data analysis, data mining. So the first step is to become a data scientist. In order to become a data scientist, you need to learn the skills like mathematics, statistics, not in detail, but at least you need to have a basis for that. Modeling, data visualization, intellectual curiosity must be there to learn these skills. These can be acquired with hands-on experience or opting for few academic courses like CQF, PRM, and similar. Though it's important to understand such courses are means and not end. They are enablers. Please note they are enablers. Also required is the second skill of programming and coding. With digitization and transformation, the basic the basics of coding languages like Python or SQL are must. And being finance experts, we know how much important the role these are going to play in our life. An example is consider them as Excel for the year 2030. So you can imagine how much importance they are going to keep. Now, just to give you an example, I'm not sure how many people of here are aware about the Power BI. How many of us know how to use Power BI? Can someone?
You are talking about business intelligence, power?
Yes, Power BI. It's a Microsoft Office tool.
Yes, it is.
So this is the tool.
Yes. Mr. Samir, yes, can please go ahead.
Yeah, our organization, we normally use this Power BI tool to analyze certain data, and it has been used regularly over here. And it's very simple.
Yes.
It is very simple as compared to Excel.
Correct. I totally agree with this. But based on a survey, it has been noted that 90% of the people still don't know how to use Power BI, yet they are experts in Excel. An example is me. I am very familiar with Excel, but I have not used Power BI by myself earlier, other than the last 1 year. So this is going to be the future. So we need to be at par with the industry if we want to survive and if we want to be the next gen leaders. And lastly, the third important thing is to have a product mindset, by which I mean to have a holistic approach or to deliver the value for the customer, prioritizing continuous evolution, data-driven decision, and customer delight. And this can be done with all the technical expertise we can get. And this, with it, as a finance expert, we'll be able to focus on outcomes rather than output and measure the success by the value they create for the customer and for the business, rather than by crunching just numbers. So with this, we can say we can finance forward and start learning by our past activities. What are basics? If we can go back to our basics and see what has been there in the past has developed to a different stage today. But today is going to be change as well because change is imminent. So with that, I conclude my speech and hand over control back to the Masters of Ceremonies. Thank you.
Wow, that was a that was a bowl full of things which need to be there. My head is reeling with those figures. I am glad that I'm not a finance person. Thank you very much, Toastmaster Vivek, for that. What is going to be happening in the next few years and what is there now, we have an idea of it. And the next generation are really truly going to be some experts in the financial field as well. Very nice presentation and thank you very much for it. Now I know I am going to get my grandchildren right into the financial business if I want to save the money what I have earned. Fellow Toastmasters, I hope all of you liked it. The presentation by Toastmaster Vivek Gupta, and will ask him a lot of questions in the question and answer sessions. Now we will go directly into the third speaker's presentation, and the third speaker is none other than DTM Faraz Farooq. DTM Faraz Farooq, for most of you who don't know him, or the very few who don't know him, is from Sri Lanka. He too is a CA, chartered accountant. Faraz moved back to Sri Lanka, much to our dismay, a year back. He works from home for a financial organization. He is in Toastmasters for close to a decade and a member in 8 clubs around the world. He is an expert in Pathways program and helped the district in spreading the Pathways movement. Today, he is going to be speaking on use, misuse, and abuse of financial statements. Toastmaster Faraz Farooq, use, misuse, and abuse of financial statements. The stage is yours, DTM Faraz.
Thank you, sir. DTM Rathinder, thank you for that very generous introduction. With your permission, I will start sharing my screen And as I always say, this is usually the longest part of what I do. The rest of it is fairly simple and straightforward. So please bear with me while the system gets itself ready. And it usually is a function of how big my file is and how fast my internet is. Okay, I guess it's ready, and I think I am over here. Let me first of all be the jealous speaker and hide the other two from this. It's only me now, so we're not going to have Hisham and Vivek anymore on the poster. Sorry, gentlemen. No, I really appreciate what you have done. So let me quietly move to a side. Friends, no, DTM Hisham, Toastmaster Vivek, I really appreciate what you have done, because I just wanted to show how big and fat I was. Friends, we have heard the 7 pillars of financial prosperity. We have heard finance forward as it would happen as we go forward. Now is a little bit of time to dwell a little bit in the moment and look a little bit in the past as to what has happened and how this entire industry has been used, misused, and abused. And by going through this, how we as participants here can learn and benefit from the experience, the fortunes and misfortunes of others. That's what true capitalism is all about. Somebody else's misfortune is our fortune. We learn from it and we learn not to jump into that trap. So let's move on, friends. Let's quickly get to now. Use, misuse, and abuse is obviously going to take a lot of time. So let me quickly rush through it. 3 aspects. And let me start with the use. There are lots of users of financial statements, and there are lots of users of financial statements as well. We would have, could have, and should play each of these roles as we get along our career, as we get along our life, as we move through. A few users of financial statements. We could be a manager, and lots of us who are employees who work for other people would fall into this bracket. We will be managers, business managers on behalf of others. And for those who have worked hard, saved a lot of money and moved on, like our DTM Ratinder, will become business owners. And so therefore they would be users of finance and financial information in that sense. Then of course, we have the government that sits on our head and which needs their share. We will also have people who would work for the company. There are business associates in form of suppliers, in the form of customers who we need and we cannot do without. And then of course, the young up and coming, really fast and furious segment of society called financial analysts and advisors, a bit like our Toastmaster Vivek, who would look at organizations very critically. Then we have the government agencies, and then of course people like you and me, the general public. These are all the different users. Now each of them has different uses of financial statements. Let us look at them in quick succession. The business managers obviously would want to use the financial information to plan, control, and coordinate business activities, because they are doing this on behalf of the owners of an organization. They will use financial information to make financial decisions. And it's very important. By the way, business managers does not necessarily mean it's only the accountants, it's only the finance staff. Everybody in the organization is a business manager. It could be the sales. They will need financial information. How much should I sell? What's the maximum price that I can quote? What's the maximum discount that I can quote? How much should be the minimum quantity that I can sell? These are all financial information. It could be the administration. It could be just someone simply, even someone as simple as the gentleman who makes our tea in the morning. They would need financial information. In what sense? Don't use too much of sugar, costs a lot of money, and so on. I'm just taking a silly example, but just remember, everybody of all of us need that financial information in some form or shape. It's not necessarily in the form of books and annual reports, but we need it. Then the owners, they need to figure out, how have my stewards, how have my staff, how have my managers performed? Are they living up to my expectations? What direction is the company going in? Is this the direction I have envisaged? Is this the direction that I set up in the beginning of the year? TTM Hisham quoted the sage of investment saying, rule number 1, don't lose any money. Rule number 2, never forget rule number 1. That is the company's direction. Is this direction being met? Then the business owners also need to figure out how much of more money investments do I need to put in, and how much of cash that I can take out, dividends, because at the end of the day, a business owner is not a charity. They are in it to make money. So how much of money could they take out in the form of dividends, in the form of profits, and so on and so forth. There are different ways. The government, of course, needs their share of the flesh. So they will want to find out how much of tax income is there from employees. All of us would like to work in an organization that will give us job security, that will make sure that we have a lot of opportunity for progress, for learning, development. And so therefore, financial information gives a great idea or a great insight into how stable is our job, how stable is our position. Moving on. I know I'm just rushing through this because obviously there's too many users. There are too many stakeholders, and that's okay. That's how complex the financial system is. Suppliers, they need to make sure when they supply goods that they're going to get paid, so they can assess the creditworthiness of the company. Customers should know that they are in safe hands. They can rely on us to supply to them. If they need raw material from us, are we supplying it? If they need finished goods from us, are we able to supply? And the financial information will give them that comfort. Analysts, advisors, they look through, sift through the information in an effort to figure out whether this is a good investment, whether this is a stable company, is it a shaky company, is it a company that's not reporting results properly. More on this a little while later. Then, of course, government institutions, government agencies will want information to collect for statistics, to allocate their national resources, especially so in countries where the economies are in a crunch situation. They need to figure out which of the sectors need a little bit more effort in. Now, say, for instance, if you take my country these days, we have stopped import of all non-essential goods, mainly because there is a bit of an economic crisis going on. So there are no more cars being imported and so on and so forth. So we got to make do with that. Now, the government had to make that tough decision. And last but not least, of course, the public. And this is generally as part of civil society, as part of the overall economy of the country. We will need to see this financial information in the light and in the interest that we are in. Okay, so these are all the different users and the uses of financial statements. And this is a very simple part. This is a quite straightforward part. This is where everybody is nice and lovey-dovey, and they're flying around with wings like the angels in the sky. So everybody is in a nice situation. Now we get to the slightly darker side of finance, which is we tackle the question of misuse of financial statements. How can financial statements be misused? And friends, they can be misused. They can be misused big time. And who are the culprits of this misuse? Sad to say, it's exactly the same people who we were talking about for using the financial statements. Every single one of them can potentially misuse financial statements. The opportunities, for want of a better word, of misuse are tremendous if the person wants to misuse the financial information. Let's again look through the same set of people who we have been discussing about and see how each of these people can misuse. Let's start with the business managers and the owners and the employees. Business managers, to show a brighter picture, to show that they are doing better than they already are, can misrepresent results. They can mislead the owners. They can mislead the general public by misrepresenting results, showing false results, or showing a much more brighter situation than it already is. They could sometimes even show a much more bleak situation than already is. And why would they do that? If they want to run the company down for whatever purpose, maybe they want to buy it over later. So misrepresenting results, either showing a brighter picture or a gloomier picture. Both of these could happen, and these are misuses, these are misrepresentations. It could happen, it has happened. We, as the general public, should keep our eyes open for the possibilities of these. For a business owner, they could misuse financial information to run down the managers. The manager is already working hard, they're doing a great job, but the business owner is not happy. No, you're not done enough. But I met the budget. No, but still no. My friend's company, they did 20%. You did only 19.5%. I can't give you a salary. These things potentially can happen. And this is also a misuse, my dear friends. Another way owners can misuse is to look at the results and say, you know what? You have a lot of cash lying around in your accounts. Pay more dividends. The reason the cash is probably being retained in the business is probably to expand the company or to refurbish or something like that. But here a business owner wants to just take the money out, thereby undermining the long-term sustainability of the organization. This is another misuse. Or delaying investments for whatever reason. Employees could make unreasonable demands by looking at financial information. Oh, you made an income 10% over last year. That means you can pay a bonus. If you don't pay a bonus, we'll go on strike. Unreasonable demands. These happen. Misuse of financial information. Of course, I left Inland Revenue blank because, you know, I don't want to get onto the bad side of the law. So I'm just going to say they don't misuse. They don't misuse. Let's just stop it at that. Leave it at that. Everything else, I'll leave it to your respective imagination. Let's now move on. Trade suppliers, customers, the other stakeholders, they could use or misuse financial information to disrupt supplies. If they see that we seem to be having better cash flow, they have already agreed a 45-day credit period, they may call you and say, hey Faraz, can you please pay me after 15 days because I saw you're having a great cash position. That's a misuse. Terms are agreed. Don't misuse your counterparty. Because the same way they are doing good today, you may do good tomorrow. Then the tables can be reversed. Customers could misuse financial situations and information to delay settlements. If they see a company is running into difficulty, the first thing customers do is they start delaying payments also. Oh, no, don't worry, they will not mind. They are already in difficulty. They have to wait. Misuse. Financial analysts potentially can look at the financial information and provide biased advice against everybody's interest, probably because of some position that they would like to defend, or maybe they are representing somebody. They have a conflict of interest, so they could provide biased advice. These are all instances of misuse. And once again, like earlier, I don't want to get onto the wrong side of the law, so I'm just going to say the government agencies don't misuse, and the general public probably doesn't really care about misuse because they are more interested in the other side of things. A quick roundup of potential for misuse. So that's the second part. Now to move on to the more critical, but probably the most important part of what I'm going to talk about today, and that is abuse of financial statements. This, my dear friends, is a big problem we have in the overall corporate sector, the economic sector, even some, not just corporate sector, even in the public sector, even in the not-for-profit sector. There's a lot of abuse of financial statements. Just in the last 20 years, just the last 2 decades, or billions of dollars have been lost. Tens of thousands of jobs have been lost. And 50 to 100 people have even been jailed because of abuse of financial statements. It reached epidemic proportions about 20 years back, 15, 20 years back. I'll flash the next slide and you will know why I'm making this statement. Do any of these names ring a bell, my dear friends? Waste Management, Enron, WorldCom, Tyco, Freddie Mac, Satyam, Bernie Madoff, Lehman Brothers. Do these ring a bell? And I don't think the bell that's ringing is a good bell. It's actually quite a bad bell. Like the bell that our timer will ring when I have crossed the 22 minutes mark today, which I believe I might. It's a very bad bell that will ring. These are all names that were once upon a time big, successful, respected, but who had a very quick and fast fall from grace, literally landed flat on their face, and lots of people suffered as a result. Let me go through each of these. Now I'm going to put a few slides across. It's very wordy slides. I don't want you to read them. And because I don't want you to read them, I'm actually going to become really big here. So you can concentrate on me and not on the slide. But there are certain words on those slides that I'm going to pinpoint and then get to the point I will make. Let's look at waste management. Okay, that's a big wordy slide, but I want you to just concentrate on this little red mark over here. They reported 1.7 billion in fake earnings. 1.7 billion in fake earnings. Of course, it was found because you can't hide an elephant under the carpet for very long. This statement was made by my late grandfather, and I still quote it. Eventually, the persons responsible, the former CEO and the owner, were found guilty. They were fined, and they really struggled and suffered eventually. Investors who lost money filed class action, and they were paid millions in compensation. 1.7 billion in fake earnings, my dear friend. And you might wonder, how does this happen? Aren't there rules for accounting? Yes, there are rules for accounting. But because there are rules for accounting, there's also room and scope to abuse those rules. And this is how you could do that. I'll discuss a few ways in which people can misrepresent accounting to bring in fake earnings and so on. Let's look at the next case. Interesting. The famous Enron. Once again, I don't really want you to read all of this. I would like you to just concentrate on the red lettering. They hid billions of dollars of bad debt. And by hiding bad debt, the effect of it is you inflate the company's overall profitability. Because when you show lower expenses, you show greater income. So they inflated the company's profitability. They also found a very ingenious way of moving bad assets off the balance sheet. They moved bad assets off the balance sheet. It's a bit like saying, I owe Ghulam Farooq, our Vice President Education, money. He has lent me 1,000 dinars. I took the money, but I know I will never pay. Ghulam Farooq, being a good man, he waits for 1 year, 2 years. I have still not paid. Third year, it becomes evident I will not pay because I have closed up, sold all my furniture, sold my car, and I have gone back to Sri Lanka. Now he is not going to get the money. Now his wife is asking, where is the 1,000 dinars? He has to somehow figure out a way to hide the 1,000 dinars. He quietly moves it into Vivek Gupta's books. And now Farooq's books are clean. Vivek is now showing a debt of 1,000 and Vivek is unmarried, no wife to answer to, so he is okay. This is what Enron did. They moved bad assets off their books, off balance sheet, to special purpose vehicles, companies that they have made up in other parts of the world, in smaller countries, in smaller jurisdictions, and very successfully hid bad assets. Very quickly moving on. Green light is on. I don't want to hear the bad bell. WorldCom, what did they do? WorldCom inflated the assets because they wanted to show a bigger balance sheet than they did. See, WorldCom was a communications company. What they did was their business model was such that they were just renting communication space from other communication companies. So when they used communication, they had to pay for the service. But over a period of time, they got this great CFO who came and said, you know what, every year we anyway have to pay for this service. So it's as if we own those assets of the other companies. So why don't we just bring those assets to our books and we call it prepaid assets or something? There was some terminology they used. By doing this, they brought expenses onto their books as assets. Once again, how could this happen? Yeah, accounts could, it's possible. An expense is a debit entry and asset is also a debit entry. So that's the beauty of accounting. And they use this little chicanery to inflate the assets and reduce their expenses. So that is what WorldCom did. Now, friends, I am not going to go into detail in the rest of it. Do you see a pattern over here? What's happening is simple accounting is being used, sorry, the word is abused to misrepresent results. We had used misuse. Over here, I dare to use the word abuse to misrepresent results. And why do I use the word abuse? Because there is intent to cheat. There is intent to lie. There is intent to fraud. And if you quickly rush through the rest of the cases, Tyco, same story, inflated the company earnings and they took money off as unapproved loans. Health Corp inflated earnings by 1.8 billion. Freddie Mac, they misstated the earnings by 5 billion by overstating earnings. You see, there is a pattern over here. Book loans as revenue. You book a loan as a revenue. You give out a loan and you book it as a revenue. How could you do that? And then you force your clients to go to a related party, somebody who is in cohorts with you, an insurer who you have a pre-existing payment arrangement with. And then you tell them to transact business with them. Lehman Brothers, the mother of all bankruptcies, 50 billion in loan, but it was missing. It was not there because all these toxic assets, same thing. Farooq moved to Vivek. Same little trick was used over here. Bernie Madoff, Ponzi scheme. What's a Ponzi scheme? You take money from Peter to pay Paul. You steal from Peter to pay Paul. And as long there is Peter, you can keep paying Paul. But the day there are no more Peters, you run away and you leave Paul without any more money. This is what Bernie Madoff did. This is called a Ponzi scheme. In normal English, we call it a pyramid scheme. Friends, same thing with Satyam, inflated revenue. Now, point I would like to make over here is, my dear friends, there is a pattern in almost all of these. There is a pattern in almost all of these. And the pattern is everybody just did simple accounting to misrepresent finances, misrepresent the financial statements. Now, why is it important for us to know this? So that all of us, using the 7 pillars of financial prosperity, using the principles of finance forward that our previous 2 speakers spoke about, we are hoping to become financially more stable. We are hoping to invest money. We want to safeguard our assets. We need to be careful about this. We need to be alert. We need to be very, very alert into these possibilities. The last thing you need is to put your money into something and end up like all the investors in any of these examples that I gave you. So when we are using financial statements, my dear friends, know that not everybody in the finance world is angelic and flying around with feathers and all white clothes in the clouds. There are lots of people who are flying around with very bad intent. And the last thing you need is to put your money in there and lose it all. One of the golden pillars that I remember, invest in something you know and invest it with people you trust. That's a golden rule. Remember, financial statements can be used, they can be misused, and they can be abused. Do not fall for rosy pictures. Do not fall for out of this world results. Do not fall for too good to be true stories. Because if something is too good to be true, it probably is, my dear friends. At the end of the day, remember, you are your own salvation. It is your money. It is your investment. Nobody else will safeguard it for you. Know that the world is not only of good people, but it's full of also not so good people who will do anything to take this out of you. Be careful, be safe, happy investing. And I wish each and every one of you something that I am currently beginning to enjoy, which is called financial independence and retiring early. If you follow the 7 principles that DTM Hishan put down, if you remember the finance forward principles that Toastmaster Vivek did, you really can get to a situation where you can be comfortable and you can start taking a few calculated risks to maximize your situation. With that, I would hand over control back to the Toastmaster of the evening. I'll stop sharing. Thank you so much for your attention. And I can see the bad bell ringing. Back to you.
Thank you very much, DTM Faraz. That was a very nice presentation in very simple words, and we all understood the pitfalls we face in our savings and wealth management. A beautiful presentation of the day put forward by our very, very a hard-working VP Education Toastmaster ground, and we found we had lot of messages which we can take home. First, we had the introduction of the 7 pillars by our friend Toastmaster Hisham, who told us what the present is and how we should manage our wealth or create wealth. Then we found out how the future is going to be, and it's going to be very complex. And I am really confused now about this, so many things. I've got a lot of questions, but I will ask him later sometime. And then we finally had Toastmaster DTM Faraz telling us what all to take all cautionary measures. And these measures we all need to take. A wonderful presentation for today. And fellow Toastmasters, now we have the floor open for questions for all the three speakers. Please let us know by holding up your hand if anyone has any questions and to whom. The first hand goes up with Samir Meher. Yes, Samir?
Yeah. I would like to ask a question to Hisan. This is regarding the sixth pillar. What we discussed, have a realistic insurance program. I've got a question for that because what I believe that I do take this investment very seriously since I've started my job. But the thing is that what I believe that apart from saving, we should think savings as something that after some life is very uncertain. If we are dying someday, then we should have certain plans that that would bring cheer to our bring cheer to our the cheer to the people, those who are depending upon us. And in that sixth pillar, we haven't talked about this term plan and all those things. Does it really require for us? That I need to know.
Thank you for that great question, Toastmaster Samir. As you mentioned, all of these are options and decisions. So you could reduce the pillars down to 4 or down to 2. Or, for example, if you would prefer to maybe save 30% of your income, maybe 10% of that 30% can serve as part of your insurance contribution. So these are 7 basic principles within which you can structure the plan that you require. I'm a great believer in learning from mistakes, but I don't like to make mistakes. So I would like to learn from other people's mistakes. So if I can pay someone to do the insurance for me and look at the investments, then it allows me the freedom and the time to go and train myself to earn a little bit more and contribute to maybe a better insurance plan. I hope that answers your question.
Yes. And one more question to you. Can we mix up investment and insurance both at the same time?
I'm sorry, I couldn't hear you. Can you mix up investment and
insurance both at the same investment? Because when you talk about this term plan where you didn't get anything, but somehow if anything happens to you, then the entire amount and certain amount will be given to your nominee. And when you didn't, if you are not dying or anything, that then nothing will, you cannot get any financial benefit.
Of course.
Hisham, can I help out? Can I just add
Yes,
something?
please. Absolutely.
So yeah, if I may add, please, you should always look at an insurance policy if you are going that route to something that will, of course, pay some money to your nominees in case something happens to you, something untimely happens to you, but also make sure that there is something called a maturity value at the end of the program, which in case you live long and you survive, there is a maturity value that you will get a lump sum back. So lots of long-term life insurance policies are designed that way, the way in which in case something were to happen during the course of the policy, money will be paid to the nominee, to the beneficiary. But if you survive the entire period, there is a maturity value that will get paid. So it also serves as an investment plan. This is one very effective way of actually saving whilst at the same time also ensuring that your loved ones are looked after in case something untimely happened to you. There is also another cheaper way of having life insurance, which is a bit like, if I may use a very crude example, like how we insure our cars. We pay a car insurance. If something happens during the year, the insurance company pays for those repairs. But if nothing happens, you lose the money. There is also similar life insurances where only if something happens to you, your nominees will get the money, but there is no investment return at the end. But that's a cheap option. It depends on which one you want. I would recommend have both. If you can afford to, have both, because the insurance only option is very cheap. For a small amount, you could actually have a big cover. But the investment option is also good because at the end of the period, if you survive, you will also get your money back. I hope I covered both aspects.
Can I add something as well to that, Toastmaster Faraz, if you permit? Toastmaster Samir, what happens insurance when we generally insurance agents come to us to sell the insurance? They their perspective is to give which is beneficial for them in general. Okay, what happens insurance when we look at insurance, we should be clear that insurance is for our nominees. Always, it's for our nominees. It's generally not for us. If you are going for the other scheme, it's the investment only. So you're not talking about the insurance when you are talking about investment schemes. You are generally talking about insurance only. And as Toastmaster Faraz said, he was talking about the term insurance, where you actually pay a little bit amount and you can get a huge benefit in case something happens. Now with the insurance, you have different schemes. If you want to go for specifically for investment schemes, you should have clear mindset. Okay, in this one, there will be no benefits from insurance perspective, but there will be certain timely deposits which I'll be giving to the institution, and they'll give me some good returns. And good returns means they can invest the funds in the market as well, not simply the interest payments. They actually invest your funds in the aggressive manner, and they give you good returns, like 30% I'm talking about. They actually give you good returns. While insurance, as Toastmaster Faraz just said, insurance, you don't get much return, but definitely there's a surety that your nominees, in case if something happens, their hires will have some returns. And in addition to the life insurance, there are different type of insurance or benefits which you can get. You can always take annuities, where after a point of time when you retire, you can get a lump sum amount of payment, or in fixed installments after a point of time. So whenever you are going for an insurance or investment, have your goals clear, that what is your perspective, whether you want to insure yourself or whether you want to invest for yourself. That's it. Thank you.
Any other person has any question? Yes, I see Umar Farooq raising his hand. Yes, Umar, please go ahead and ask your question.
I just have one question about like this whole saving things, and it's talking about interest and riba. You know, as a Muslims, we tend to avoid interest, and if we are having like compounding, and okay, you'll get a lot. So how does it? I am talking specifically to Hisham. So as a Muslim, how we can avoid that interest thing and still be able to save? Okay, we can get some. Maybe Islamic bankings are there. Sometimes I feel that they are saying the word, changing the word from interest to gain or something like that. But at the end, there is interest involved in it somehow. Same thing goes for the insurance as well. So you are getting so much return over it, or they say that they have rental business and from that they are getting return. They have some explanation to it, but still I don't trust. As a Muslim, what you advise for Hisham?
That's a great question. So let me start with compounding. The thing with compounding is it doesn't have to involve interest, because compounding involves time, effort, intelligence, relationships, commitment. It doesn't have anything to do with interest per se. I'll tell you a very simple example. If you spend 5 minutes a day reading a few news articles, just 5 minutes a day, and you do this for 20 days out of every month, that's 100 minutes that you have spent, which nobody else is doing. If you do this for, let's say, 10 months out of 12, that's 1,000 minutes per year that you're doing, nobody else is doing it. You do this for 30 years, the amount of knowledge that you have built and compounded, because by the time you come to year 5, the year 1 article will help you to understand it better. That's compounding. So I understand your point that interest is a feature, but it doesn't have to be part of your personal decision. And I am a great believer in building assets that will generate you return. So if you look at the in terms of purchasing a house, and if you put in the diligence to looking at the location, that will compound over a period of time. The same applies with gold. The same applies with your education. The same applies with a job. You might start off as an auditor. You might move on to an assistant accountant. You then move on to chief accountant, finance manager, chief financial officer. That compounds over a period of time. So when we say compounding, it does not have to involve insurance and it does not have to involve interest. But the time, the effort, the commitment, the relationships, the education that you put in, when you do that over a period of time, it compounds, making you a valuable expert, generating you an excellent return in the marketplace. I hope that answers your question.
Yes, it is. That is very true. And one additional question I had. See, the money has evolved over the time. Like you have barter, then you have metal money, then you have paper money. Now plastic money. Now I think future is invisible money, like Litecoins and Bitcoins and all these things. Do you think it's a safe investment as per the current era? Do you say it's a safe to invest in this kind of thing, or there is a risk or something?
That's another great question.
Yes.
That's another great question. Now, when you speak to many finance people, one thing we manage is risk, but one thing we don't like is also risk. Because let me give you a quote that someone once mentioned to me, and this is the 2014 world champion of public speaking, Dhananjay Hettiarachchi. He said that risk is the currency with which you buy success. And that's very, very true. Because if you do what you always do, you will get what you always get. If you do what everyone else does, you will get what everybody else gets as well. Now, with regard to the changing face of currency, remember, we started off by giving 10 chickens for 2 goats. So from the barter system, we now have BD, rupees, dollars, dinars, all of that. So progress will happen, evolution will happen. But the pace at which you accept and the pace at which you transact is perfectly within your control. For example, I'll ask you this question. Do you know or do you have a credit card? Most probably the answer is yes. Or if you know someone who has a credit card, probably the answer is yes. But do you know anyone who has a credit card but has a credit card bill which is 0? Now that is a rarity. That is a rarity. So all of this, if you take a credit card, it's 50 days interest-free credit. To put that into perspective, that's 2 salaries. So you can purchase today, get your first salary, get your second salary, and then make the payment. But it is a function of the human indiscipline that we become slaves to the very tools that are supposed to serve us. I hope that answers your question.
Thank you very much. And very well said. Thank you.
Yes, Toastmaster Omar, you go ahead.
Toastmaster Nabil.
Hi, good evening. My questions to DTM Hisham. As apart from an individual, as a society, encouraging saving habit, is it really against our economy? It's harmful to the economy because circulating the money is required for the improvement of economy. So, for example, we have heard cyclists are bad for the economy. So, did we really, how this savings will add value to the economy?
All right. I'll give you, before I answer the question, I'll tell you an interesting story. There's a story that goes that there was a janitor in a university in New York. When he was retiring, the university offered him an envelope with money and he said, no, I really don't need this money. He was into his 70s. So the university said, you're a janitor. You have been a janitor all your life. Why will you not accept this parting gift? He said, I have enough money. So they asked him, how much money do you have? He said, I have $8 million saved. I said, how is it possible that a janitor saves $8 million? He said, when I started off working in this university, when I was sweeping the auditorium, there was a presentation going on. And in it, the person said, save a percentage of your income and put it away. And that compounded over 40 years added to $8 million. Now, the reason I mention this story is that is the impact that savings can have on you personally. You come first, the economy comes second.
Thank you. I got it only from the last word. Thank you.
The sting is in the tail.
Anyone else?
May I ask a question, sir?
Yes, sir, Mr. Farooq.
Yeah, my question is addressed to both TM Vivek and to DTM Farhaz. Maybe they can collaborate on that one, because both of them, one of them talked about technology and the other talked about the misuse of financial statements and everything. So, and DTM Hisham can also jump in if required. You all know the story of the recent case of the GameStop, where the stock was manipulated by internet investors, by Reddit users. Now, with all of those technology available, the technology was used to misuse a completely financial statement and bring about a stock market value update. What does this say about the people in the market? Your opinion, sir.
Toastmaster Faraz, you can go first.
Yeah, okay. So see, we will not exactly talk about this particular example, but in general, wherever there is opportunity, people will exploit, people will use, people will misuse, and people will abuse. Let's start with that, and that's just a play on the title that I used for my presentation today as well. Whenever such opportunity arises, I mean, you have just given a recent example of price manipulation by a bunch of youngsters, and they were quite successful in it. But this has been there from time immemorial. It just so happens that the mode in which this was done was technology. The time was 2021 amidst a pandemic, but similar things happened 10 years back. Similar things happened 20 years back. Similar things happened 1,000 years back. There will always be someone who will be able to study the system very critically, very carefully, and figure out a loophole and come through it as the winner. And that's what this whole economic system is all about. Now, what does that mean for us common folk? Is probably a more relevant question. We should be aware that such people do exist. I'm not saying these are a bunch of criminals. These are just ultra sharp people, very smart. And they are exploiting the system. Nobody said you're a thief. All they're saying is, we found a loophole, we are misusing, we are going to use it to our benefit, right? And it's the same way, like, I still remember, I'm just going to use a very crude example. My first few years in the audit firm, I was working for one of the big fours. At that time, it was Big 8, and through mergers, it has now become Big 4. You know, in my first couple of years, you know, they used to send us out for audits. They used to pay us a traveling claim. The traveling claim was based on the distance of the client from, it was based on from your office to the client place. Now, if the client place is in the next town to my left, I could potentially take one bus to the town to the left. But the way I did was, I went to the main town in the right, and then I took an intercity bus to the town in the left, and then I had to take a taxi to my client place. And the reason was, it was more efficient for me to do it this way. The real efficiency was because I got a bit more money in my pocket. All I'm saying is, there was an opportunity and we used it. That was also because we were paid pretty peanuts, so we needed the extra cash. But hey, there was an opportunity, we used it. Now, were we robbing? No, We were well within the law. We were well strictly within the rule. Same thing with the example you quoted, Toastmaster Farooq. And it's going to happen yesterday. It's going to happen. It happened yesterday. It's going to happen today. It will definitely keep on happening. Wherever there is a loophole, there will be somebody smart to figure that out and to exploit it and use it to their gain. Are they necessarily crooks? I don't think so, as long as they are within the rules. Are they, if there was intent to cheat and rob people and deny people of their jobs and so on, well, then it's a bit of a moral discussion. But otherwise, I guess I kind of answered. Do you want to add anything, Toastmaster Vivek, to that?
Yes. Toastmaster Ghulam Farooq, what do you think of Toastmaster Faraz? He's a gentleman, yes, right?
Yes.
He's a gentleman. So he just said
Publicly, yes.
yes. So probably was the right word, yes. So basically, he just stated that during time of his articleship, they were being paid peanuts. That's why they opted that kind of measure to get the right amount. Okay, and during this session only, we use the quote: "Lack of money is the root of all evil." Right. So that
Yes.
justifies whatever Toastmaster Farag just stated. It's about the opportunity. As soon as we get it, we try to exploit it. And in our own eyes, it's not like exploitation. For example, I'll give you my example. When I just moved to Bahrain, there used to be an app called Kareem. Kareem, it was like a taxi driving app. So what I just realized, as soon as I moved, it can operate with the Indian number as well. And it for any other number, be it Bahraini number, Dubai number, you can always use the number. And as soon as you register on the app, you get credit of 3 video or something. So I was pretty new in Bahrain. So I used my 2 or 3 numbers to get the credit and traveled as much as I can. And that went for a whole year almost, but it worked well for me. So for a year, but from my perspective, it was not, I'll say that because the company was aware I was doing that registration, but after a point of time, they stopped it. They developed, they improvised it. Just now we were discussing about the cryptocurrencies. So cryptocurrencies, it's not a bad digital currency. It's just that it's not regulated. The only problem, it's not regulated. As soon as the regulation comes in place, it will be circulated among all the individual people will be using it. Similarly, with the example which you just said, it was just a loophole in the system, which the sharp-minded people exploited. So as whenever there is an opportunity, that's how the system develops. If you talk about the banking system, back in 2008 and 2009, when the crisis happened, the banking system was still regulated and robust. However, still there were new developments by the sharp-minded people in the economy, which led to the crisis. And that led to the further development of our Basel framework, which introduced LCR, NSFR, and like frameworks, which helped to keep monitoring the banking regulation even to the greater extent. So that's how things develop. With the GameStop example also, the people in the industry learn from this, so that the further, I'll say, financial crimes or cyber crimes or such kind of market manipulations can be stopped, and that too at a bigger level. So that's all from my end. Toastmaster Hisham, if you want to add anything.
I think from what I understand is, before I go to Toastmaster Hisham, maybe if he wants to comment on that one, is what I understood is that the loopholes are now easily plugged in because of the technology. They don't go on for a longer period now, but still human greed or human needs overweigh all the precautions and everything that goes upon. That is what happens. So the thing is, even if technology goes further and everything is mechanized with the data analysts and everything, you still need financial analysts to still say to the people, this is wrong, this is right. Am I correct? For the future.
Correct. Totally right. To conclude, artificial intelligence and digitization is an enabler, but it's not going to replace the human mindset itself. So that's all from my end.
Thank you.
Do we have any more questions? I think we have exhausted all of them. Toastmaster Omar, I see you raising your hand?
He's muted. You are muted.
So muted Toastmaster Omar.
No, I was
Add two
I
words
pa-
to the two eminent speakers.
partially raised. Just kidding. So
Okay,
I
you
just,
got all your answers?
no, just one thing only I want to. So they say that if you don't take risks, you end up working for a person who took risks. So when you are talking about common men like engineers and doctors and all, see, we don't have a financial education part as a part of syllabus, and we don't learn about it. What is how to invest, where to invest, and how this. So, what are the tips that you can give to maybe have a safety net? How to minimize that risk? Some people are risk aversive, some are risk they avoid or something like that. So, I'd like to ask this question to DTM Fahaz. So, what is your tips? How do we can, as a common man, we can handle this situation?
Sure. So thank you so much. Great question. And let me
Our timer
start
is
off by just reminding
Toastmaster Faraz.
there
Our
was a
timer
very
has a very unique way of reminding us about the
timer.
time.
Your voice is not.
Yeah. I think we can take it offline later on. We need to follow the
No,
agenda.
I will maybe if you want just for completeness sake, I'll just give a very quick short answer.
Okay.
Maybe just to remind, actually DTM Hisham touched on this matter and he gave a tip, and I will just emphasize on that point. Almost all of us, and even us accountants, when we start off with our paper qualifications, we are not financial experts. We need help, and the best help we can go for, and as he reminded us, I would like to make money from other people's mistakes. And who will give us this guidance? Go to a respected and trusted investment advisor. Very early on in my life, I found a very respected and trusted investment advisor in Bahrain, who I have been working with for a long time. And this person, through years of experience, will tell us. Now, of course, not all investment advisors are respected and trusted. You need to make sure you find the right type and then go with them and trust them. And believe me, in the beginning, I didn't trust this gentleman, but today I still say one of the best decisions I made was to join hands with him, because bulk of my savings is through the measures that he advised me. So this is one very simple tip for everybody. And then as we go along, we learn, we become good at certain things. So try your hand in those.
Yeah, you can share the number. You can share the number also. That is
most definitely I will. I guess that's a quick and short answer. We can of course discuss in detail. Over to you, Mr. Moderator.
Okay, if we have all finished with the questions, I would like to now hand over the control back to our president, and for further recognition and the ending of the meeting. Mr. President, are you ready, sir?
I'm going to quote our past president and current PQD of District 20 over here. He says, I am born ready. Though I am not born ready, I would like to emulate that.
Yeah, we've got 8 minutes
It's
more.
copyrighted.
No,
Copyrighted.
It's copyrighted by Bahrain Advanced Toastmasters. So anybody here can use it.
Toastmaster Faraz, I thought he was there, not there in person. Just his picture was there. But now
he's always here. Be careful. He's like a CCTV. Ladies and gentlemen,
Mr. President.
Thank you so much, ladies and gentlemen. Our Toastmaster of the day, DTM Ratindranath, deserves a big round of applause for guiding this program. Thank you so much, sir. Thank you so much, DTM Ratindra. So much to learn from your style, your poise, your overall entire demeanor. This is why I say we need to put experience out there so we can all, us youngsters, youngsters like me can learn from you, Friends, thank you so much for being with us. Thank you for joining. I would now like to ask our Vice President of Education, sir, are the certificates ready to be displayed?
Yes, sir, they are ready. When you announce the name, I'll share them.
Okay, very good. So let us now start a quick recognition session of all of our presenters. First of all, I would like to recognize the first speaker, first presenter, DTM Hisham Jifri, for presenting us 7 pillars of financial prosperity. Let's give him a big round of applause. DTM Hisham, I am sure you will treasure the little signature in the corner with a smiley face on it. All right, thanks a lot. Thank you so much, DTM Hisham. Next, I would like to thank and honor our next speaker, young budding Toastmaster, up and coming finance professional Toastmaster, Vivek Gupta, for telling us what Finance Forward is. Big round of applause. And the Vice President Education, maybe you should take over the next recognition because otherwise it's not going to make sense.
Yes. So the final recognition is to none other than our President, DTM Farhas Farooq, for his valuable speech about use, misuse, and abuse of financial statements and we should be. Thank you, DTM Farhas.
Thank you so much.
And thank you all for everything. So
Thank
I'll
you so
hand over
much.
to you, Mr. President, for taking the guest feedback as required.
Indeed. Thank you so much. So friends, ladies and gentlemen, that's the end of that's a wrap for our session today. I would love to get some feedback from our guests. I know I'm not going to start with Toastmaster Omar Farooq. Though he's a guest, he's almost like a member. He's always with us and I appreciate that. I would like to let me start with, let's say, Toastmaster Christine Kipsang. Are you with us, ma'am?
Yes, how are you? I'm here.
Very good. Can we get some
Very good.
feedback from you, ma'am?
Yes, I'm Christine Kipsang, PPM speaking woman that is based in Mombasa. Toastmaster, I joined in May, and I like the way you are organized your program today that is fully educational. I've learned so much about misuse of financial statements when I joined. And I will come back again because. But the funny thing I found is I think you are only men.
No. We have a lot of ladies, but I think they all have weddings to attend today, so they went away.
Yeah, so I was feeling a bit awkward that I'm the only lady there.
No,
but,
our timer is
our
a
timer.
lady.
Our timer is a
Toastmaster
lady.
Nuha. Please put your video on. Toastmaster Nuha.
Okay.
She's the lady with the
Toastmaster
band.
Nuha
name.
is our
You-
most vibrant, most
You are
vibrant.
not alone.
Mr. President, you know
Okay.
what happened?
Okay.
There was a mistake from my part and from your part, both, because we didn't recognize Toastmaster Nuha as our timer today. Please, before you end the
Okay.
session, I want you to do it.
I will do that. So
You
Toastmaster
did a
Christine,
wonderful job today.
thank you so much for visiting
Yeah.
us. And I would like to tell you
Yes.
that we meet on the first and third Saturdays of every month is the Bar in Advance meeting. The first Saturday is where we have this special educational series. Only in this month, August, we moved it to the second. But from next month, please, 1st August, first Saturday, same time, please feel free. We have this education program going on and it's open to all. And our regular meeting is on the third Saturday. Please feel free to pass by. Next week, same time, we will have our regular meeting. Great to have you. Regards to our fellow Toastmasters in Mombasa, and we would all love to also visit your club as well. Thank you so much, man. Thank you.
Thank you so much.
Thank you. Next, I would like to ask one of our younger Toastmasters who has been here from the beginning, and she's recently joined ABC. Toastmaster Fazila, are you with us?
Hello.
Hi,
Yes.
Toastmaster Fazila. See, Toastmaster Christine, Toastmaster Fazila is also a lady. Toastmaster Fazila, we would like to have your
Video
comments,
on.
please. Put your
Video
video
on,
on
please.
because Toastmaster Christine is complaining there are no ladies here.
I'm not in my best outfit.
Oh, that's okay. Okay, then that's fine. But at
So
least
put
now
your
Toastmaster-
picture on then, whatever.
Can we have your feedback, Toastmaster Fazila?
I think this was a very entertaining seminar. I took a lot of notes as well because I felt they were really, really important information. I don't really have any questions. I think like I would understand more about finance as I grow in life. And yeah, I like the book recommendation, The Richest Man in Babylon, because I was about to read it as well. And yeah, that's it. Back to you.
Thank you so much. Let's give her a big round of applause. A new Toastmaster. She's recently inducted, but I'm sure a very strong prospect. Next, let me ask my good friend Toastmaster Munir. Are you with us? Quick comment, sir.
Yes. BTM for us.
Thank you so much for being
Thank
with us.
you
Quick-
for
quick
asking
feedback.
this question. Plus, unfortunately, presentation I joined 15 minutes ago, so I got only the last lap of it. Definitely, being it's a working day for me, I could not attend this session. Next Saturday, the next one, the workshop, whatever you are going to do, I'll make myself free, and I'm sure I will attend to get the knowledge. I'm sure, and very good program. Keep it up, and very well. Thank you. Thank you for
Thank
the
you so much.
organizers and yours.
Thank you, President Munir of my other home club, Sri Lanka Club Symposium. Just so that you know, the recording of this meeting will be up on our YouTube channel in a couple of days' time, so you can catch the whole thing at your convenience.
That will be great.
So it will be up on.
Thank you very much.
And we post all of our meetings on our YouTube channel, so you can go back and see all of that. So thank you so much. Great work. Thank you for being with us. Anybody else? I would like to invite now. Maybe Toastmaster Samir. You were quite active, so maybe a quick comment from you, sir.
Yes, sir. Yes, sir. It was really great to join this group today. Basically, by nature, I'm an electrical engineer. Finance is a new thing for me. The way I am upgrading in my career, I have started taking responsibility of certain. Finance has become means I have started taking certain responsibility where finance is very important for me. And now looking at this seeing the three speeches, it was really wonderful. Means it would apart from apart from my English speaking skills, it can improve my finance knowledge also. It has improved, and I am really glad to join this group today. Thank you, sir.
Thank you so much. Thank you so much, Toastmaster Samir. Now, ladies and gentlemen, just bear with me because I have just one more responsibility to do as a formality. But please don't go, stay. I would like to adjourn the meeting because it's our time of adjournment. So I call the meeting, I adjourn the meeting. But now we can continue our discussion. All right.
Recording will stop or it go on?
Do you want it recorded? If you want it recorded, I'll keep it on. No problem.
Yes, record.
Yeah, that's not a problem because we started a few minutes late.
No, maybe I thought maybe you forgot it or something.
No. We started recording. We got the recording button. The recording button entered the meeting at the right time. Toastmaster Jatinder, you have been quiet.
At your leisure when you want me to stop, sir.
Yeah. Toastmaster Jatinder, I would like to have you. Yeah, you can stop the recording. It's fine. But we can just continue to take comments.
At the very